Hello, it's Pascal here again. So today I would like to talk a few minutes about the high growth stock section of Mike Scott, and especially I want to show you how I use the timely alerts in connection with the breakout calculator. So first, let's have a look at the high growth stock. You can find it here. I'm clicking here. Okay, you have my growth list that is updated every week here, but the most important is the volume trigger alert. So here you can see that you have a list of stocks, and whenever an alert is generated, this line moves in green color, and then an alert like this one is generated. You see, for example, yesterday we received an alert at 11:13 to buy CRM. Okay, so what you can do when you have that sort of alert is go to volume search. You can type CRM. Okay, that was yesterday. You can see here at about 11:10 you had a volume search, so that's why the alert was generated. Okay, so before opening the breakout calculator, I would like to show a back study that I made a few days ago on all the high growth stock alerts that were generated since July of last year. You can see here the type of returns that these alerts have generated. In green, you have the benchmark, the S&P 500. Okay, what does it say? It says that if you buy S&P 500 at any day since July 2014 and you keep your S&P 500 for 5 days, you make a little profit. If you keep it for 30 days, you make about 1%. If you keep for 60 days, you make 2.5%. Okay. Now, let's see what happens to the alerts that were generated by Mike's system. Don't forget that since July 2014, the market has been in a broad sideways kind of trading pattern. So it's very difficult to make progress when the market itself is not moving, because as soon as you buy a stock that breaks out, then it might pull back to the point of the breakout. And this is exactly what we can see here. You see here in red, we have all the alerts that when generated were generated at a price that was 2.3% higher than the 5 MA. It's already an extended stock, most probably above the envelope. And in blue are the return when the price was lower, was inside of the envelope. And you can see that both were negative even for the first 15 days. And then it's only after 30 days that the cheaper price kind of alert start to kick in, and after 2 months and then 3 months, it is the real value of these stocks that express itself in kind of higher profits. So this means that when you have an alert of, and that at the time of alert the price is extended more than 2.3% above the 5 MA, then you basically can short the stock, because within 5 days there is a high probability that the price will go down. Or however, if the alert is issued at a low price, at a price that is not extended, then you might enter the trade and keep it for a longer term period. Okay, so now let's move to the breakout calculator. Let's see. So I already download CRM data. You can see it here. So I will simply try to test a breakout. What was the price? Let's see, what was the price of breakout? It's 74.93. Okay, 74.93. So I will use 500 days. I will put a stop of 2.5%, and here it's a breakout on volume, and I will enter the price 74.93. Okay, so we start to go to try a lot of target profit and loss, and then we see that we have a pretty good risk return ratio. But the most important information of this table for high growth stocks is this one here. The entry level of 74.93 was 3.16% above the 5 MA, which means that at that price it will be maybe difficult to make money. So if I run the sensitivity analysis, okay, that takes a little bit more time. Yeah, I will stop this. I need to run the sensitivity analysis on a lower price. So I will do an entry price at the 5 MA, for example, which is 72.6. I will do at this price 73.4, the close of the previous. Here I erase this 73.4. Okay, we can see that the breakout at 73.4 provide good returns already, but mainly this price is lower than 2.5% above the 2.3% above the 5 MA, which means that if we pull back to that price, then it could be interesting to buy CRM. Okay, so that's it for today's video, and see you later. Bye bye.